we're still seeing some backup contract. It is not going away. It's still a seller's market.
Excited to bring up Jennifer Hernandez. Jennifer is a senior loan officer for Legacy Mortgage, Mutual Mortgage based in Houston, Texas. She has over 27 years of experience, 4,400 loans closed and counting, and won Houston's Mortgage Lender of the Year in 2018 and 2019. Excited to welcome Jennifer to Real Estate Hacking Live.
Hey, guys.
How's it going, Jennifer? How you doing?
Hey, good. Just another day in the mortgage world, making loans happen.
We're get a little choppy feedback, so hopefully everyone can hear. I mean, you've got a unique perspective with this market because you're in the lending space, and that has been the volatile space lately with interest rates kind of being a little crazy. So what are and you focus on single family. So what are you seeing going forward right now, going forward over maybe the next 12 months, as far as where real estate market will be?
I think, and apologies for the feedback. My company computer didn't let me in StreamYard, so I had to do it on the phone. So sorry about that.
No worries, we're good.
Yeah, thank you. So I think that we're definitely seeing in buyers, we're seeing a very big gap in affordability. I talk to people every day that say they want a house of this price, but a payment way down here. So there's definitely a struggle right now between what people want to pay. I think that that's going to continue. I think that people just need to get used to either a new reality or rework their budgets. We see a lot of people that on paper, they can afford a higher payment, but that doesn't mean that that's what they want to pay, right? So yeah. I think that in general, we see lots of buyers out there. They're just trying to absorb the new reality of what payments are. We just keep everybody engaged and say, listen, y'all, rates are going to be down in a couple years. You can refinance. You marry the house, not the rate. So, you're missing out on appreciation. So like at
the end of the day, if rates were to go down, and historically within 2 to 3 years, they'll once they start increasing, they decrease, but no one has a crystal ball there. But at the end of the day, if you can afford it, it's it's a long-term play for you, not just like a 2-year, 3-year place to live. It might be, it might make sense to go ahead and make that decision. But what percentage of folks that you've talked with and they ended up not buying a house, delaying, say January, February, how is that? And then you go talk to them this summer after interest rates started climbing. How did that impact their buying power? Did you see like a 20 or 30% drop
I mean, as far as a percentage of people they're
they're looking and you're like, you're good up to 650 based on your income. But then they go in to talk to you in July and you're like, well, everything being the same, you're good at 475. Now those are numbers. I just threw out those numbers. I'm just curious what you see.
I mean, it's a 10% difference in price, 10 to 15. I mean, that they qualify for,
which is huge.
So it's large. Yeah, it's large. So the more on a monthly payment level, and again, each price range has a different mathematical equation to it, but there is a gap. So we're really combating that by educating, making sure people have the right information, making sure they understand that, hey, you do get, if they're going from renting to owning, remember you get a tax deduction once a year. You'll pay less income tax. Remember that your house is appreciating. So it's like you're paying more in monthly payment than you're used to. But remember you're directly contributing to a savings plan that's going to benefit you long term. So it's just helping them understand that. But there's a large percentage. I mean, everybody's payment shock. Some people can absorb it.
I imagine
more than
it
others,
impacts the first-time home buyer much more than folks that are selling. Because if you're selling, you're capturing equity and
Yeah.
typically putting it into another
Yeah.
home.
And you're benefiting that way for sure.
Yeah. So, what are your thoughts on going forward, the real estate market? Like, because I'm sure because you see the transactions coming through, and like I don't know if you've seen a little bit less transaction. I mean, you're seeing both sides of transactions. You've got purchases and then you have refis. But so,
Yeah.
what are you seeing trend wise there, and how do you see that playing out over the, like, say, like 24, 36 months?
I mean, we're still seeing some backup contracts. It is not going away. It's still a seller's market. Yes, the percent of appreciation or the percent over is down, but we're still growing. So the market, it is not going backwards. There might be some isolated cases here and there where people need to sell because they bought something else and they're, there might be some stalled markets areas around town. That's normal. But for the most part, we're seeing values as far as real estate values, they're still going up, not at a ginormous pace that they were last year, but that was not sustainable.
No,
It really
no,
was,
and
it wasn't logical. It happened for a short period of time, and the homeowners that benefited from that are super happy about it when they're able to sell and capture that equity. But I see things continuing to rise. As far as the rates go, every day is really just so different. Just because the Fed raises the rates does not mean that our rates are going to increase.
Yep.
It doesn't always happen hand in hand. But I think that things are in the sixes for a period. I mean, I think anything below that is probably a gift. But again, thinking of the long term, there'll be another refi boom. I mean, it's a historic, if you look at a graph of the last 50 years of rates, every time there's a recession, the rates go down. That's how you get yourself out of a recession. So we're not there yet. The prediction is 18 to 24 months. So we'll see another refi boom. It'll happen. But
yeah, and you never know when the lowest. I mean, I don't know that we're going to see like the 1.8% interest rates again anytime soon.
Yeah, that wasn't realistic either. Just like 30% appreciation wasn't realistic. Neither was that.
When I bought my house, I don't remember the interest rate, but then rates went down to a historic low, and I refied because I was like, surely they'll never go below 5.5, and then they just kept falling. And at that point, I was like, it didn't make sense to refi again. And but in any case, thoughts for first-time home buyers who are iffy on whether they can afford it or maybe they're close to it. What are your thoughts? And I'll quickly share my thoughts. I was like, regardless of whether you're going to buy now, 6 months, 12 months, 18 months, go ahead and go get pre-qualified with your loan officer because they can at least let you know what you're looking at and what that product is, what your options are, or the things, and then this is the important part, the things that you need to do that would help you get a better rate, better terms, or help you qualify. And if you don't know those things, it's hard to improve on them. So what are your thoughts for folks?
Yeah, you hit it right. You hit the nail right on the head. I mean, find out what your plan of action needs to be. I wish everyone came to me 6 to 12 months ahead of time so that we can have proper time for homework, tell them how they should pay off debt in what way that's going to boost their score the highest. We do a simulation for people to give them a good pathway for that and really give them real knowledge on what they need to be saving, for that time when the time comes and what house they do qualify for so that they can have time to rework their budget or whatever that might look like. So yeah, you hit it right there. People should just inform themselves and talk to a lender earlier than later. Definitely.
And reach out to you, right?
Yeah, sure. Jen, loanwithjen.com. All my info is loanwithjen.com.
And you get a phenomenal YouTube channel. It's been growing. I've been watching you. So
yeah. Over 360 videos now. So I've just been doubling down on educating people. I just want to get people the right information. So if you're listening, whether you're a realtor or investor or whatever, I have videos for everybody. Loan with Jen on YouTube.
Love it. Yeah, definitely check it out. So thank you very much, Jen.
Thank you. Talk to you later.